All right, guys, this is for my investors that are out there. I wanted to share a scenario that came across the desk here, and I thought it was just a really good conversation, and not everybody thinks like this, so I thought it'd be important to kind of share it with you. Um, just, if anything, just to kind of open up your eyes to some opportunities that you may otherwise think don't exist. So right now, there's no denying that we're in a higher interest rate environment, so it's really hard to find properties that cash flow, especially if you're looking at financing that has maybe a 7 or an 8% interest rate attached to it, and you start running the numbers with the sales price, you're like, man, there's no cash flow on this property. It's not a good deal. But I was talking to an investor who was refinancing multiple properties. They were pulling cash out of multiple properties at somewhere in the mid eights. And when we were looking at the numbers on it, those properties were already rented, and so they were picked up many years ago where they had enough of an equity position to where it actually made sense. So we refinanced them at those price points. There wasn't a lot of cash flow left over. We're taking most of the money out of that, and the intention behind this was that this investor is now going to take it and go back into the marketplace and use it to buy other properties that do have that cash flow. So in other words, kind of spreading out their investment. Instead of one or two homes, we're looking at now trying to pick up like five or six, right? And in talking to them, I'm like, are you nervous about borrowing somewhere in the eights? A lot of investors they're worried about that. They don't want to do it because they want to wait till things hit five or six, whatever was the low rate that they were used to many years ago. And they're just on hold until that time happens. And he goes, it doesn't really matter what the interest rate is. He goes, it's a matter of like, what's my return on investment now? So if I can go and I can refinance these at 8.5, he goes, heck, if it's even 10%, doesn't really matter. As long as what I'm going to get return on investment wise is greater than that, it's a home run. So he was looking at properties that were pulling significant returns. Like you're talking like 12 and 15% return on investments, but his borrowing cost was only 8.5. So he's looking at the difference between that, and he's like, why wouldn't I do that? Just makes a lot of sense. Now he had confidence in the market where he was buying. He also understood the market he was buying, which is a huge thing. And he also knew that those areas were going to continue to appreciate, that the rents were fairly stable. The way that he was renting these out was to a market that for the foreseeable future looks like it's going to continue to be very stable and in high demand. And so it made a lot of sense to pull that capital and get reinvested in there. Now, what does he pick up? He's going to get now appreciation on all those properties, right? Instead of two properties, we're going to get appreciation across the board on all those properties. We get a write-off depreciation on all of those homes. In fact, a couple of them are going to be short-term rentals, so he will do some cost seg studies on those and then be able to kind of forward, and this is a little bit of a trick, you can forward the depreciation into the first year or two to take a massive tax write-off, which will offset his personal earnings. So a lot of strategy behind that. So these were not just for cash flow, these were also for future appreciation, having the tenant pay off the debt faster for him, and more importantly, it was a tax move with depreciation. So I want you to kind of think outside of the box sometimes. Again, if the borrowing costs are high, if the return is high enough to offset that and still kind of get you where you need to be at, it doesn't really matter what the borrowing cost is. Now, there's actually an even better move on that is if rates actually go down and you own it, and you're in a good financial position, you refinance and you increase, you kind of widen that return on investment. But a lot of investors get so nervous on what is it going to cost them to get in the door, especially our first-time investors, or maybe somebody that owns maybe one or two properties. They're really nervous about it because they haven't bought in a long time. And these deals are harder and harder to find. There's no doubt that you're going to have to turn over a bunch of different properties. You're going to have to look at a lot more than you did a couple of years ago to find them, but there are plenty out there. There's a lot of the bigger investors that are still making some massive moves right now. So just some encouragement for you. If you're looking out there, remember, we're licensed in a multitude of states. So if you need help and you want some financing solutions for your next investment property, give me a shout. Love to run some numbers on it and connect, and we'll talk to you soon.